Okay, so in this lesson, I will explain you demand and supply using SR levels and market structure. And this is a very useful technique to tackle these markets. I'm now currently on the monthly chart, but it's better to start like on a weekly for other charts. I first start with SR levels. That's basically a level that has been tested as support, but also as resistance. And you have to take the wicks. For example, I'm just going over some wicks. Here you have a wick as support, but you can see that it here acted as a resistance, acted as a resistance, and acted as a resistance. So this is going to be SR. Clearly, you have to look at the wicks. And you can go even here. Do you see the wicks here? Okay, so you look, has it acted as resistance? So here you have support, support, and this is not clean. You see it's the bodies. So you go a bit differently. Maybe you use it like this. And I still wouldn't really count it as clean, as a clean level. So this seems well, but I would actually take this level. This level you have support, 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 resistance, resistance, resistance by the wicks. So you have another monthly SR level. Then you go on to the weekly. So this, you can call this monthly SR, and the same thing goes with this monthly SR over here. On the weekly, the same thing you gotta look for. And I'm looking at the wicks again. This one, support, 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 but no resistance. There is no resistance. And here it didn't really go towards resistance as well. So I'm not going to take this one. So I'm just going to move this one to, let's see, over here. Okay, so that is a clear support resistance level. Support, 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 rejection, resistance, resistance, support, resistance. It held as support. Here it tapped it exactly, resistance and support. You have clearly a weekly SR going on over here. All right, so these are probably the most important levels that you should have on your chart. And here, there's nothing here. This is just acting as a resistance for now. Maybe in the future, this can become resistance, but we don't have that yet. So in here, you don't want to place that level. And here it's only resistance. Maybe, yeah, you can potentially take this one. Do you see this wick over here? I am going to take this one because it might be important in the future. It's only one tap. So it tapped as resistance, 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 and then support. So it's not really that strong, but still you have that weak SR. You don't want too many levels. You just want the best levels using the wicks. So knowing this, now we are going to look at market structure. So basically everyone knows what market structure is. So now we did the SR levels. Now we're going to look at the market structure, and I'm going to use the tool, the path tool. So you know, uptrend, higher, higher high, higher low, higher high, higher low, higher high, and then this is the uptrend, and then you shift into a break of market structure, lower high, lower low, lower high, lower low. So break of market structure, here is your reversal. So this is going to be your MSB, market structure break, or BOS, break of structure. You can call it whatever you want. Okay, so once you have that, you look for that lower high, and then the lower low, and the lower high again. So that is the downtrend, this is the uptrend. As long as we hold, you are in the uptrend. So for example here, we have a higher high, a higher low, higher high, higher low, higher high, higher low, higher high, higher low. Why do I still see this as a higher low? So this is really important. We never closed below this low. So you are still in the uptrend. And here you would say, maybe this is a higher high, higher low, higher high, break of market structure. But the thing is, overall, you have to look at it overall. You are still in the uptrend. If you would like take some kind of trend line over here, you are still in the uptrend, and here you have a massive gap. So this still counts as your uptrend. You have to look at this low, not this low. This is your higher low. And here we make a higher high, but we don't close below this level, so you don't have a break in market structure. So what do you have? Higher high, higher low, higher high, higher low, higher high, higher low. Still higher low, looking at this one, and even with this one. So you're still in the uptrend. Here, this is your high, this is your low, this is your high, this is your low. This is your high. And now it gets a bit interesting, because here you clearly have your higher high and your higher low and your lower low. You have a break in market structure. Okay. But overall, looking at this structure, you still have a higher high, higher low, higher high, higher low, and you still have a higher high, a higher low, and we can still push. Although this is quite significant. But for example, here you have a higher high, higher low, higher high, higher low, higher high, and now here you clearly have the break. This is clearly a break. Look at the difference on the weekly time frame, including the time length. You could still have this higher high, and you can still push higher. But this is still significant. I still see this as some kind of break, although we have large buys incoming here. So it depends a little how you see this. This is still in the future, so we cannot predict what actually will happen. So that's why we use demand and supply. So demand and supply. Demand is a region where it actually was consolidating and buyers stepped in before a huge move upwards, before a break of market structure, for example. So I'm going to tell you that you have to look at 50% body candles. And what I mean with that is that you, let's say this is your body of the candle. And this is, I want to use this one. Okay, it's going to make this. Okay, so let's say you have this candle. The body is actually smaller than the wicks combining. So it's smaller than 50% of the wicks. So you basically have to add the length of this wick and the length of this wick. If that is larger than your body, then you have some demand or supply candle, and it's the candles that we are looking at. So basically, for a example over here, if I zoom in, you have to look at the huge moves, and before a huge move happens, while it breaks your level right here, there was a moment that it pauses, and you have two demand supply levels. This is demand. It was accumulation before it moved higher. And I would say this one at first. You can clearly see the body is smaller than the wick. This is a demand level. Okay. And if you go on lower time frames, you can find even better entries. For example, here, this one is a demand level. And now look at this one. This is a demand level because we pushed higher, a large move upside. We have that one body candle, and what does it do? The first time it taps it, boom, you have a rise into supply, because this is actually a supply candle. Why? Because it broke market structure here, large move to the downside, so a large move with inefficiencies. An inefficiency is a fair value gap, open fair value gaps, like here. If you don't know what a fair value gap is, you should look into YouTube, go into YouTube and look what a fair value gap is. It's basically a gap between three candles. You have the left candle, the high, and you have the third candle, the low, and in between you have a gap. It's not that this wick aligns with this wick, so it doesn't touch each other. So then you have a fair value gap. Can you see this? So this shows you a large move to the upside. Once you have some of these gaps, it means that you have a large move with a lot of buyers inside, and before that you usually have such a demand zone or a supply zone. And it's very strong. It's a very strong level because that was the last zone before a huge downward trends with a lot of inefficiencies. So the market always moves efficiently, meaning you have a high, you have a low, you have a high, you have a low, like this, you have a high, you have a low, you have a high, you have a low, with no gaps, with almost no gaps inside. You see, this is clean price action. And let me show you, let's see if I can find an example of such clean price action. Like here, every inefficiency is being covered. High, low. Here you have inefficiency, it's covered. Low, inefficiencies, it's covered. So this is very efficient. Every time you do have an inefficiency or a fair value gap, it gets covered. It gets covered. It gets covered. So it's very clean. And then you have an inefficient market, which moves with a high, with a low, a high, and then you have a lot of gaps, a lot of gaps, a lot of gaps, a lot of gaps, a lot of gaps. It's a lot of inefficiencies. And once you see this, you can expect price eventually to move back and fill all the inefficiencies. When does that happen? If you are looking on the weekly chart and you have a lot of inefficiencies, you wait for the break of market structure. And this is here. You can clearly see lower high, lower high, lower high, lower low, lower high, and then the break. So here you have the break of market structure. Expect price, once you have that break in market structure and you have a higher low, expect price to cover the inefficiencies. And it actually did. So the first inefficiencies were covered over here. So you push up towards supply. Why? This is your 50% body candle. As you can see, supply. And this is the inefficiencies. So it covered the inefficiencies and we rejected at supply. Boom, down. We went down again. And of course, now you have to see we are in a different market structure. You are in an uptrend. You're currently in an uptrend because we are. So you're actually going to try and fill all the inefficiencies over here. And what is your actual confirmation to hit the next zone, like this. And this is going to be the next zone. Confirmation is when we push through and close, even close, or just push through on a lower time frame. And then your next zone of supply is going to be here. And it pushed through, and then it acted as a support. You see the midline? Acted as support and pushed even higher. And why? Because we still have inefficiencies over here. You have the inefficiency over here and over here. And look, if we tap this inefficiency, we have some consolidation. And then eventually, if we tap this one and this one, you have a new supply zone over here. This is supply. And look where it actually went down again. It was difficult because we were at an all-time high. It went down again at supply. But knowing this, we are still in the uptrend because we shifted market structure over here. And then you just look for longs. And even if it shifts, so you have both the occasions, shifts from supply, and then you can long again. So what do you do if you have an uptrend? And you see that we still have inefficiencies going on over here, and it's likely going to get filled. For example, here we are in the uptrend, higher low, higher low, higher low, uptrend, consolidation. If it then moves back in a demand zone, you want to long this. So basically we have inefficiencies here, inefficiencies here, and inefficiencies here. Do you think that the market will come down towards this zone? It is possible, but knowing the strength of this move, knowing that we are still in the uptrend, you should look at the first demand zone, basically here, to long. And look what happened. The top of this candle was tapped, and this is demand. Top of this candle was tapped, and then we pushed through. Same thing goes on over here. Once you have that push over the high, large move, inefficiency, inefficiency, inefficiency over here as well. Let me just delete this one. You go all the way to the top. If it comes down, you are still in the weekly uptrend. There is no break in market structure here. You never see this, because this is the last low. This is a break in market structure. So what do you look for? If you have a large push to the upside, you look for the first demand zone. You can say maybe it fills this one and it goes towards this demand zone, because you can clearly see this is a demand zone as well. But if you're in uptrend, you're looking for your higher low, it will usually use the first demand zone with an inefficiency or a fair value gap covered. So before the fair value gap, you have the demand zone. And look, we tap it, we bounce. We tap it, we bounce. We tap it, we bounce. Simply as that. And here we tap it, we go into rejection supply. We come down again, we go into, what is this? Supply. Why? We have a 50% candle move, breaks the low real sharply. You have here the fair value gap, and then you have the midline, or the 50, the 0.5 FIP, I would say, and it exactly touched down and goes lower, and it actually taps this demand level, or this demand candle all the way here, this one. Once more, supply, and it goes higher. So it's basically super easy. And you just got to start with your SR levels, and then you look at the market structure and you look at the type of move. So here it is a little bit difficult. But overall, on the weekly chart, on the monthly chart, what do we see in price action? We just continue the uptrend. So high, 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 low, high, and there we go. But right now, this is a very large move. Here we came into demand. Where is the demand over here? we basically weren't able to hit this zone yet. So knowing this, we have our supply, our demand zone here. And we have a weekly break in market structure. As you can see, goes higher, a higher low, a higher high, and then breaks down significantly. But there are no inefficiencies over here. What I do see is basically, I would say, this zone as supply. But as you can see, this whole candle is also one. So maybe just take the Fips over here and look at the EQ. Maybe this EQ might hit like that. And we move down into demand. Something like this. I don't know, because it is tricky. We are still in the uptrend. This one was way easier to fucking long. Sorry about the language here. But you see that? You have that move up back into demand. Okay, on the daily, you gotta look on the daily then. If you have that large move, look for the demand zone. You have a lot of inefficiencies here. And if you take the rectangle, this candle over here was your demand zone. Look how clean. This is really gold, people. You gotta look closely. You have a large move to the upside, and you still have open fair value gaps. We break market structure, so we move down into demand with inefficiencies covered. That's it basically. So we bounce. Now, on the daily chart, so I go top down, monthly, weekly. So on the daily chart, I have market structure break, I have my supply, I have that EQ. What else do we see? I don't need that. What else do we see? Where is it now? Here. I'm gonna look at market structure. So here you have a higher low, higher low, higher low, and then you break market structure here. Higher low, lower high, sorry, lower low, and we can still hit this zone and move into demand. So that's maybe what I think that might happen. Like this. Okay, because we do have that market structure break on the daily as well. This EQ aligns with supply over here. And you have that inefficiency going on, so the fair value gap before the move down and breaking the low here. Do know that we never closed below, so we never closed it below, but we are still moving in the downtrend. So unless we break this high, we are still in the downtrend, basically. So everything from here to here is could potentially lead to the move down. So what do I think now is I will move this one all the way down here. I can make it smaller, my supply. You see that last candle here? That is a huge supply level. And we still have an inefficiency untapped. If you go closer, it was untapped. So what I think might happen, knowing that this is the break-in market structure, you could see this as your first, I would see this as a first low, and this everything, lower high, and then the move down. How will this happen? It will probably either just push through this level exactly towards here, or it's going to do something like this, the move down, and then move like here. I do think that we might fill this zone, and this will be a short zone. If we close above that zone on the daily, we close above that zone, we have a market structure break again, and then it will be tricky because I think we might then push for the highs because there are no inefficiencies here again. So this could basically hit ATH then, ATH. For now, we're going to look for a potential short here, potential long, and big short over here. This could be like a big short. Something like this. We don't want to close it, and then just the move down. And if you want to be certain, you look at this. If you want to be certain here, look on the daily chart. We go like this, this, break in market structure, some kind of supply, and then boom, the move down. Okay, so that's basically what I think might happen. Currently, we have 2 supply zones here, and we have 1 over here as well, which we are basically very close at. So now you have to think what is potentially going to happen. If it's an efficient market, we should push through to this level, because I don't really see this as a massive move to the downside. If you look at this massive move, you could think, why don't we drop back below here? Or even if I have like a better, even here, that's a better example. So you push through, and then you come back into this demand zone. And clearly on the daily, you have this wick as demand, and you have eventually this one as well, because we have a fair value gap, and it's still open. It's the same thing. It never touched. So you have a fair value gap, EQ of this candle, and then we went higher. Why don't we move all the way here and fill this? Because we are in a very bullish, high trending market. A huge move on the weekly, huge move. And if you see a move like this, it usually don't run back towards the previous low. It will stop at the first demand zone and move higher. So basically still, we are in a huge move. But what I miss is a tap of a demand over here on the weekly. So we still have the open fair value gaps over here. With the break in market structure, I just think that it will go down into this zone on the weekly. But you do have on the daily this little zone, and it filled this and not this one. So it can definitely still continue higher. But I'm getting some market structure shifts on the daily and on the weekly, and eventually, if you look at the economy, if you look at the NQ, I don't really think that is currently possible to hit this level. But with Bitcoin, you never know. Look how we reject this one right now. So this is your supply level. We filled this one, but knowing that we already filled this one, we can still push higher. But look on the 4 hourly, We tapped it right now, very bullish movement. We were actually long. We were long from this zone. And the basic reason, because we broke with a lot of power through this high, and we filled all the inefficiencies. And if you then go on to the 1 hourly, what do you see over here? 50% body candle, and this is why we longed. Boom. And we bounce higher. Now we see a large break, a very efficient market. I don't think that this will push back lower for now. Okay, so we might fill this one back higher. Very efficient market. It's possible because we are at the EQ of this 4 hourly. But in my opinion, yeah, it is quite significant because there is no inefficiencies over here on the 4 hourly. There is no fair value gap. So the last fair value gap is actually here. And we are currently at this fair value gap. So the market has been efficient, unless we are going to fill this one. This is the last inefficiency over here with that support. We have a market structure break on the 4 hourly. So we have two potential moves, I think. I think it will just push through here. I think either we drop now, or either with the market structure break, we have a market structure break here and a higher low. If we don't break this low, we should look for a higher like this, and then the market structure break. I think that this is possible. So we are looking at an increase of 11-12% maybe, unless we break this zone and then we go way lower. Okay, so to make a summarization, you look at the SR levels, support, resistance, resistance, support, support. That's one, for example, on the weekly. And here we have, just going over it quickly. Nope. Yeah, maybe this one. See, this is pushed through, bounced here, bounced over here, stayed above, and then rejected over here. So this is your SR, weekly SR level. Then you look at market structure on the weekly, still high, still high. Massive move to the upside. What happens with massive moves to the upside? Usually it goes back inside and then move higher, but we have a weekly market structure shift. So basically a huge move, a lot of inefficiencies. If you have a huge move and it comes back to the first demand, you long. Here we haven't touched the first demand yet, and we have that market structure break. So in my opinion, we are going down. Let me just show the example over here. You have a huge move to the upside, inefficiency, and then you have the market structure break over here. But we know you have to look at the whole move, uptrend, 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 large move. You take this all the way and you are still in the uptrend, even if it goes flat towards this zone. This is not a market structure shift. If it closes below this one, this is the market structure shift. So what do? You look at supply, then you look at the demand level. Sorry. You look at the demand level. Sorry, basically this one. And that demand level held and it never closed below our actual higher low. Meaning that we push higher we make a higher high, and then we have the break of market structure over here. Break of market structure over here. But overall, on the weekly, you are still, as you can see, we are still in the uptrend because we never went lower. You're still in the uptrend. So what do you look for? Even if you have a short-term market structure break, you look for that demand zone. You have one here, and you have one a bit closer, and you even have one here. I would actually say this one. This one, like the whole thing is your market structure. But if you can pinpoint it, like the last one, you can clearly see the EQ of that candle actually was your support. And then you have the market structure shift. Not, in my opinion, not really this one, but the actual break in market structure was here. Because if you would like look like this, you see, this is all one move, in my opinion. You don't go suddenly like this. That just doesn't sit well. You take this as a large move, and then you break structure here. And what happens? You break structure, and you bounce back from the break in market structure all the way to the top. And in here, previous supply, because this is previous supply, turns into demand. And if you go on like a daily chart, I guess there would be some demand in that candle as well. So let me just see. Yeah, you can clearly see it already. If you go on the daily, you have that demand level candle over here, and look how clean. Tapped it, boom, tapped it and went. Okay, so that's the explanation of the demand, supply, SR levels, and the market structure shifts, market structure trend. This is how you can really find the big moves, the targets. The targets, if you shift from market structure over here, where is the target? Look, if you close here, where's the target? First demand zone. If you have like a large move, a lot of inefficiencies, first target is here. And the next target is if you do go lower. If you reject here, you go lower. Next target is here. For value gaps, supply zone. This one, this smaller one, which you start on a weekly. So even here, you drop down and you have a lot of inefficiencies. You see, and you stop around the demand zone. Where do you target? So you're trying to shift market. The market tries to be inefficient. The market will cover all the inefficiency here. So the fair value gaps, where to? Well, most likely supply. You're in the downtrend, so this is supply. And this thing that I actually noticed is that we never tapped it. We never tapped this daily supply. And you still have an open level. The market has not been efficient. So that's just my opinion. My opinion is, boom. Be efficient, crash down. Okay, so that will be it. If you have any questions, you can ask me in Discord, and then I will try to explain.